Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
Hello and welcome to the Australian Property Podcast. I'm Kate Campbell and I'm here with Amy Lunardi to ask her some of your questions. Now, I'm not normally your host, but I'm filling in while a few of our team members are overseas. So I'm looking forward to learning lots alongside you today because property is not normally my area of expertise. I stay all in the personal finance space over on the Finance Podcast. How are you doing, Amy?
I am doing really well. Always jealous of Pete gallivanting all over the world and Owen's over there at the moment. I think they're having a catch up somewhere in London and we're sitting here in fun Melbourne.
Yes, it is not very nice outside today. So hopefully we can keep everyone entertained with the podcast. Now, Amy, I've got two questions here about townhouses. So I might throw them both to you and then we can see where we end up. The first question is, I'd be interested in your thoughts regarding townhouses. Do you consider them as a good asset? The second question is, what's the difference in the likely capital growth profiles of different top property types, such as houses, townhouses? Everyone says that houses have the most capital appreciation, but buying a house is often out of reach these days. If I buy a townhouse or unit, will I get effectively no capital growth? If so, what does that mean for my ability to upgrade in the future?
This is such a common question that I hear, and I think it's because for some reason there is this myth that has been put out there at some point in time to say land is king. Having a house on a full-size block with no strata, nobody corporate, and the bigger the land, the better, is the priority. And it's absolutely not the case. And the reason why is because there are many other elements that drive capital growth, location being one of the key ones. And in some situations, or in many situations, I would argue is actually more important. So if you have a fixed budget, whatever that is, and you're looking in for an investment property or for a home, you're going to have to make a decision at some point whether you get into a better location, and in which case you're going to have to compromise on something, which is going to be maybe the size of the property, the number of bedrooms, the condition, or the type of the property, for example, an apartment or a townhouse. Because then alternatively, for the same budget, if you did want a house, you have to go further out. You just don't have a choice because a lot of the value in a property you're paying for comes in the land size. So you're not comparing apples with apples if we're comparing a house with a townhouse for a certain price. So that's the first thing. You're going to have to make a decision. And I think it's important to also start with explaining what a townhouse is, because I think in different states or different people or even sometimes different real estate agents will define a townhouse differently. Kate, what do you think a townhouse is?
I'm thinking tall, narrow, side by side to another house.
Okay, there you go. So it's not wrong, I guess. But for me, that could also be a house as well. It could be like a terrace. We have a lot of terraces in the inner cities of Sydney and Melbourne. For me, a townhouse is, first of all, something that's been, in most cases, subdivided. So a bigger piece of land chopped into, two pieces of land or multiple. And for me, a townhouse is something that just doesn't have anything above or below it. So once you've got something above and below you, you'd start to call those apartments. But we could also clump units or villa units into this category as well. For me, personally, I call a townhouse something double story and a unit something single story. But regardless, we're usually looking at something that is subdivided. So it might have strata or body corporate, etc. As opposed to a house on its own title. So it's just a house on its, original piece of land or generally more land. So that's the kind of my rough definition of what townhouses are. But then, coming back to the idea around, what's better, first of all, you need to define, well, is this a home or an investment property? Because if it's a home, that property's suitability to you needs to come beyond anything else, right? Like, because if I said to you, oh, you could buy a house and it's going to definitely get better capital growth. And of course, no one's ever going to be able to guarantee you that, by the way. But then you have to live an hour further away from work and nowhere near your friends and family and in an area which isn't walking distance to anything. And yeah, you might get better capital growth, but at the significant compromise of your lifestyle. Would you do it? Would that be worthwhile to you? I mean, some people might say yes, but if it's a home, you need to first sit down and say, okay, well, this is my budget. That's generally fixed. These are all of the things I need out of a location. This is the minimum size of a property I want, the condition, etc. And then sometimes that will just naturally look like a townhouse. That will have to be a townhouse to be able to meet those requirements in the areas you want to live. And sometimes there's really great benefits of townhouses, like depending on their age, they can be more modern, less work required. And because in many cases they might be double story, even though the land is smaller, you get more accommodation. You get more internal floor size as well than, say, a single story block house a little bit further out. So all of these extra things have to come into play. And also, I want to highlight the difference between the range of townhouses you can get, because there is very much a difference between like quality of townhouses. You could have a really boutique block of only 2 or 3 townhouses. There's, a lot of common property. They have amazing floor plans. They're a really quality build in a really great street. That's a great property for an investment or a home. But then I have seen plenty of townhouse developments where they have squeezed so many onto that block and it feels just really claustrophobic, and maybe they're 3 levels or really weird layouts or really pokey. And, that's not going to be appealing to an owner-occupier and for that reason, for a long-term capital growth too. So, we're not just, it's so hard to just clump everything into the townhouse category here.
Yeah. Do they have more capital growth in general compared to a unit, a flat?
Well, not necessarily, because again, it depends on that particular property. So, it could be what's defined or someone defines as a townhouse, but it is one of those terrible developments versus, a boutique apartment in a great location with a view of the ocean. Well, just because one's an apartment and one's a townhouse, they've got different capital growth drivers there. So don't just focus on the class or the category. And also bear in mind too, it is really hard to look into the data of these types of things too, because when you look at property data, they're often just segregating them into houses or units. There's kind of quite often nothing in between because the definitions are so grey.
Yeah.
So talked about what a townhouse is and the fact that there's a range of townhouses, the fact that if it's a home, it should really be suiting your own personal requirements. From an investment point of view, an investment property, regardless of what it is, that needs to meet your investment brief and it needs to meet your investment cash flows. And in many cases, and I never say all cases because property is so variable, but in many cases, the townhouse will give you better cash flows. What I mean by that is that the yield will be higher overall because we're talking about less land and more accommodation for a similar price usually. And therefore, your rental amount proportional to your purchase price will be higher. And then the newer the townhouse, perhaps the more tax benefits too. So all of that has to come into play because, you can't just go out and buy a house and say, well, this is going to get me the best capital growth if you can't afford to hold on to that property and you can't afford to hold on to it for the time you need for it to perform as well. And as an extra layer to that too, some investors require lower maintenance. They don't want a big house. They don't want an older house. They want something that is, set and forget. And again, that might look like a slightly more modern townhouse. So to summarize this question, I have seen plenty of townhouses perform really well over the years for capital growth. They are generally ones that are well located. They are boutique. They've got good floor plans. Like all of these things, which are kind of obvious, they're just properties that people want to live in. And I had a really great case study recently where there was a house I was looking at for one client. They weren't looking at the townhouse too. Another client was looking at the townhouse, and they were the same suburb. This is really important. They were the same suburb. One of them was a house on 700 square meters, 3 bedrooms. The other one was a 2-bedroom townhouse. And the 2-bedroom townhouse sold for more. Yeah. And the reason why is because that house was in, I won't call it like a terrible part of the suburb, but if I was ranking it from A to F, it would be like C grade, the C grade part of the suburb. And it was a bit pokey and it was a little bit run down. The townhouse was in an A grade location. And even though it was only 2 bedrooms, it was really spacious. It was really quality built. It had a lovely feel to it. And it was incredibly popular. So that's just one case study to show that it's not only about the type of property.
So focusing a bit more on the quality of the property and not worrying as much about the labels.
Yeah, exactly right.
All right. The next question we've got is about pre-sale renovation companies. Hoping you can provide some insights, feedback, or even warnings on pre-sale reno companies that help you flip a house or get it ready for sale to maximize profit and simplify the process. Now, Amy, I haven't heard too much before about pre-sale reno companies, so I'm interested to hear your thoughts.
Yeah, so there's a couple of different types. The ones that I have used before to help my clients prepare a property to sell are ones where you get a quote and you pay them. Basically, you pay them sort of upfront, or they might have payment terms. But there are actually other types of companies where they will do all of these works and essentially be your project manager, and then their fee or their costs come out of the proceeds of the sale. And that can be particularly beneficial for anyone who is wanting to sell a property but just is cash poor. So it might be equity rich and cash poor, and therefore they just don't have the funds to be able to pay up front to be able to renovate or present that property to sell. So I've seen, like for example, children who might have inherited a property and it's been quite run down and they need to sell it. Those companies could be beneficial in those instances, or if you just don't have the time or whatever it is, because they essentially coordinate the whole process, coordinate the trades. They can help you work through what they think is going to add value to that property and what's worthwhile doing and what's not, and essentially do everything a lot quicker than you could do it yourself. So there are a lot of benefits, and I think that if it works for your situation, it can be really great, but you've got to come into this with questions.
It sounds like a pretty good deal, Amy. I'm assuming they are going to make a healthy profit margin though.
Well, this is what you need to figure out. You need to figure out how much they are going to be charging for this whole process, as it's kind of like a project management fee, really. And I'm all about paying extra if it makes sense, like outsourcing things if it makes sense. And, sometimes it's not only about the what they're achieving for you, it's about saving your time and energy as well. So first of all, before you go down this path, I think it's important for you to get an understanding about what should be done based on your own research and based on speaking to local agents about what's actually going to add value for this type of property in this location. Like, who's going to be buying this property? What do they actually care about? Because sometimes, especially if a property is like maybe probably going to be knocked down or sold to a developer, or it might not be worth going to the effort of doing any kind of renovations. And in some situations too, like buyers in that area might not necessarily pay more for a renovated bathroom, which is done cheaply. Like, it's either done really nicely or not done at all, so they can come and do it themselves. So just seeing what properties are selling for, seeing how much extra premiums renovated ones are getting based compared to unrenovated ones. Like if you can walk through as many as you can and then see what they sell for and, just educate yourself and then speak to agents. What would you recommend that I do to a property or do this particular property to be able to add value for this local demographic, just so that you don't get carried away then once you engage a company, because they might be, and I haven't used the ones before that sell where you pay them through the settlement funds, but they're usually going to be paying some kind of project management fee, and that could be a percentage. So in theory, they've got a drive or an incentive to do more, because then they get paid more.
And they're not too worried if you are able to make a significant profit, if they know they're going to be paid anyway.
Yeah, well, yeah, in theory, yes. Like you would want to be hoping that you're engaging them to avoid overcapitalizing, but you still need to be there in the driver's seat to say, this is where we've got to draw the line in the sand just as to what we're going to do. And it's not always just about making a profit. So just, by spending $1, you expect to make it $2 out of it. It doesn't always work that way. Sometimes it's about being able to present a property so that you could actually sell it. Because, if it's not a development property or if it's not a knockdown and it's kind of borderline, by doing this renovation, you're going to get a better outcome, but also a quicker sale and an easier sale. But then you got to factor in, how long will that take? What are your holding costs? Is this a quick, we prepared an apartment for sale not long ago, and we did paint, carpet, flooring, light fittings. We did quite a bit internally. And it only took 2 weeks. The company just came in and did it all. It was fantastic. That didn't impact our timeframes. But if you're doing things like new kitchens, new bathrooms, and then certainly anything that requires a building permit, then it's going to potentially push things out. So, figuring out how long these things will take. And if you've got holding costs, you've got to factor that in too.
How long might it take to renovate a kitchen or a bathroom?
Well, it could be, you could renovate a bathroom in a couple of weeks if you really, really needed to.
Yeah.
And, I've had clients do that before. But you'd want to factor in, say, maybe 6 weeks or 8 weeks. It can sometimes depend on if you're using, a specialist bathroom company and they've got everything good to go, or if you're project managing or, there's an issue with a trade. I renovated a property years ago and the tiler broke his arm just before he was going to start, and that pushed everything out. So you've just got to work off, buffers there. But certainly, when there's permits and extra things involved, it can take time. And also then you need to educate yourself around, well, what kind of warranties is this company providing me? Are they getting the appropriate permits if required, et cetera? Not just taking that information verbatim. And then I would also be very much keen to understand, what are the payment terms? What are the conditions? Because what if you do sign up for this company that is, you're paying them out of the settlement funds or the deposit or whatever it is? What if your property doesn't sell? What if it's a really slow market? What if the agent has promised you way too much money and you can't achieve it and the property just sits there? So what are the timeframes and payment terms just in case you have delays around your sale and all of a sudden they send you an invoice and say, well, hey, this is due, you've got to pay it.
Yeah, I can imagine that would be quite challenging. Do these things work potentially better on houses? I'm just thinking, when I look around my local area, there's not a huge difference for the same flat with a renovated bathroom and a not renovated bathroom. Like, it wouldn't be hundreds of thousands of dollars of difference.
Well, no, but we're not necessarily talking about hundreds of thousands of dollars of work with these projects.
Yeah.
These projects can be quite small. So the company that we used for this apartment, which we gave it a zhuzh up for sale, I think the client spent about $20,000.
Okay, yeah.
And in my opinion, it was absolutely necessary that we did the zhuzh. And it definitely achieved a better result, and it definitely achieved like a shorter days on market, because it was appealing to first home buyers, and first home buyers in particular generally have a lower appetite to do works because they're often spending a lot of their money on the purchase price itself and the stamp duty and all of those other costs. So for them, move-in ready can be much more important. So it doesn't necessarily depend on the type of property or the price of the property, etc. But of course, if it's a $500,000 property, you're not going to be going to spend $200 on it if the renovated properties are only selling for an extra 50 more or 100 more.
Yeah.
You've got to do that research up front before you speak to these companies, especially if they are ones that are, quite salesy and pushy and end up doing things that you don't need to do.
Sounds good. Do your research, ask lots of questions, and make sure it's worth it before you enter in any of this.
Yeah.
Like most things in finance.
Correct, exactly.
The next question is along the similar line, but on the outside of the property. So the question is, how much of an impact does landscaping have on the value of a property? What should your budget be as a ratio of the property value? And this is from the mulch shoveler.
The mulch shoveler, their nickname.
Yeah.
So to answer the first question, how much of an impact does it have? In my opinion, quite a lot. But not necessarily. Owen and I did an episode last year on things that add value to a property. If you are interested in learning a lot more about that, go and listen to that episode. It's really good because we do talk about the difference between adding clear and overt value, like adding an extra bedroom. Of course, that's going to increase value as long as it's not a terrible sized bedroom. Versus things that just add to that sort of feel of that property and the desire of that property. And, it might be the difference between having 2 buyers and 3 buyers at your auction, for example. And landscaping more goes towards the feel of that property. But in some cases as well, it can add direct value. So we'll go through all of that. But then the second part of this question is, what should your budget be as a ratio of the property value? There's no golden number here.
It'd be nice if we could solve all of our financial problems.
14.2%.
With one ratio.
I recently, when I did my last renovation on my family home, I spent about 15% of my total cost on the landscaping. But that's because there's certain things that I really want and I'm going to be there for a really long time. And as an investor, that might not make sense for you. So if we are looking at the things that make an easy win, which is low cost for high impact, it's the things that just make that property instantly feel a lot nicer and you can go and technically do yourself, like mulching, weeding, adding bursts of colour with in-season flowers, cheap but decent sized shrubs and trees. Because, if you go and buy a tree that is going to be beautiful in the future, or maybe it's the middle of winter and it looks like a tiny stick now, yes, of course, we know that that's going to be great in 10 years, but it's not going to really change the value of that property now. You might chuck in some cheap DIY paving, some stepping stones, lay your own grass, and then maybe some cheap lighting. Like some properties have these festoon lighting that you get from Bunnings. And if you're having winter open for inspections at 6 p.m. and you've got those on, it can be really lovely. And shop around, if you go to the local nursery, in the inner city, the cost of plants and the cost of these things is going to be really different to going to a wholesaler out in the, industrial areas, for example. So shop around if you're wanting to do a bit of DIY. Of course, if you engage a professional to do this, it's going to cost you a lot more. Paying for their expertise, you're paying for their time. So just really have a think about, what's your goal with this landscaping? You're about to sell this property next month. You're going to do things a lot differently in comparison to if you're going to live there for a long time. I've just installed some trellis onto one of my fences and I've popped a tiny little plant at the bottom. And in 2 years, that's going to be really nice. But right now, it looks terrible.
So that's not a short-term reno.
Exactly. But even extra things like pressure washing. You might have a really dirty wall or dirty paving or dirty part of that.
Driveways and things.
Dirty driveways, yeah. I've also seen these really great products. They've come off on my TikTok a few times, on my Instagram or something, which is like a paint, which you can go and paint outdoor concrete, which you could do yourself. There's all of these little easy wins that you can get. So I think that if you're presenting a property sale, wanting to add a bit of value really quickly, absolutely focus on these things that you can do yourself. With a recent place we sold, our townhouse development, I went and went to a nursery and bought just all of the nicest, beautiful little flowers and trees that I could see in season at that point in time. I don't actually know if they'll survive because I didn't do much research on them, but it looked beautiful.
Yeah.
And it made a big difference to the photos and everything there as well. And the next level up is, having, doing things like decking and pergolas and outdoor structures, which can be quite costly. And then it's a case of sort of coming back to, the previous thing that we talked about, which is, well, how much is this going to cost me? How much of an impact is it really going to make? Versus can I spend that same amount of money on doing those other things, which are instant wins?
Yeah,
so
I presume some of those outdoor structures need council permits.
They can, exactly right. So
not everyone DIYing their own decks.
No,
that are
please don't do that. So it can depend on the size, and it can depend on the type of structure. Is it an enclosed structure or an open roof structure, as to whether it needs a permit? And especially if you're about to sell a property, please go and get a permit, because it'll come a buyer will ask the question, they'll say no permit, the buyer might have an issue with that, and then you've negated that value add as well.
Yeah.
The things that don't necessarily, or I'm going to say controversially maybe, don't add value to a property are things which are a bit more hidden, like things like irrigation under the ground. And maybe you've spent all of this extra money to do this amazing drainage network, or you've got like a heap of these in-ground lights that cost you a heap of money and they look amazing at night time, but maybe purchasers are buying in summer and they're never going to see it. These are things which you would probably or potentially invest if you were living there long term and they were important to you, but not necessarily installing right now. It's kind of the same as solar panels, which I talked with Owen about in that other episode. It does add value to some people, but are they necessarily going to pay more when they're there bidding at auction? They keep thinking, oh, should I go an extra $1,000? I just really love those solar panels. Generally not. Not. It's a nice feature bonus ad, but it's not like you spend $5,000 here and you get $5,000+ back.
So you're landscaping in a way that's obvious to the buyer and makes it feel more homely and like that you can move in tomorrow and it's all ready to go.
Yeah, exactly. What we're trying to gain with anything to do with value add is that instant appeal, that feeling. We're trying to generate that emotional impact. You go and watch properties like The Block, if you do, and you see the difference between, one contestant that spent all of this money or maybe done something really clever with their landscaping versus another one where it's just like, basic or just not appealing or not functional. And yes, it absolutely does make a difference. So the short answer to that question is yes, it has an impact on the value of that property. Not necessarily a very clear monetary value, and a little bit harder to research, because if you're looking at sold examples of properties, there's such a varying scale in landscaping quality. But yeah, don't focus too much on saying, I have to just, spend 5% or 10% of my renovation towards this. Depend on the space. And also bear in mind, maybe you could get some professional advice, but then implement it yourself. Pay for a landscape design and then go and do it yourself and save on costs that way. But at least you've got that professional help.
It does seem like something that you might be able to get some really easy wins, though. Like a lot of the things you mentioned don't cost a huge amount. They're not the same as doing a bathroom reno.
Absolutely. Yeah, exactly. And you could, you go out to these nurseries in the outer suburbs and you could find this tree that just creates this like massive impact straight away for $500 or whatever, which I know sounds like a lot for a tree, but you compare that to like a blank flower bed, chuck a tree in, some beautiful little flowers underneath, and it's just instant appeal. kind of like painting a property. It's just straight away.
Straight away.
Yeah.
All right. The next question I have is about heritage overlays from potential investor. What do you need to consider when buying a home with heritage overlay?
Okay, Kate, to answer this question, I'm just going to explain what an overlay is to start with, because in different states, you're going to have different, wording around this, et cetera. And I'm based here in Victoria. An overlay, whatever it is, regardless of like heritage or flooding or bushfire, is essentially a restriction on that land, which says if you do certain things to this property, you may need to get council approval. You might need to get planning approval, versus a property that has no overlays. And again, depending on what you need to do, because we've still got zoning that comes into play, which is a bit different. But you might not need council approval to do anything. So, for example, a heritage overlay is generally acknowledging that that property or that area has some kind of heritage significance. And it's not always the case, because sometimes we'll come across like a really daggy 70s property that's been, built and it's not adding any kind of value to the heritage of the area, but it's just got the overlay on it because it's in that particular street. But essentially you have to go through the process of getting council to say, yes, we approve what you're planning to do on this. So the planning scheme will define what types of work need a permit. So for example, you can just Google heritage overlay Victoria or heritage overlay of that particular council that you're looking in, and you could read through the requirements of that overlay. In most cases, to demolish or do any kind of extension or external alteration under a heritage overlay, that will require council approval. But then sometimes even things like painting the front of that property, you might need council approval, or putting in a new fence, for example. And where it's really important is that anything that goes via council to get approval generally takes longer than if you don't. And there can be discretion involved, especially with heritage. It's a bit less black and white, because then there's someone at council making a decision on what they think is appropriate for your design.
It's not, is it safe? It's also, is it appropriate based off these parameters?
Exactly right. And there are some councils, and I've had personal experience with this, where their heritage department is much more strict or much more opinionated than other ones. So yeah, really important to know if whatever you plan on doing in the future will trigger some kind of planning permission under all of this. And that's in comparison to needing a building permit, which is just say if you don't have an overlay, or just say you're only doing internal works to that heritage overlay property, but maybe you're moving some structural walls, you will still need a building permit. That doesn't get approved by council. That's all done privately through a building surveyor. Council just keep a record of it at the end. So if you're looking to buy a property to live in it, I appreciate this question's about an investor, but just say to live in it and you want to renovate it down the track, you've got to be aware of that. But as an investor, it does depend on what you're doing, because a lot of my investors that I work with don't plan on doing extensions to properties or big external works to these properties. A lot of my investors, when they want to value add, it's more internal stuff, it's more cosmetic stuff. So if you're an investor and you don't plan on doing any kind of extensions or works, it's not going to have a direct impact on you. Down the track, though, when you want to go and sell that again, I do often get the question when people say, well, does a heritage overlay actually detract from value, or does it add to value? No black and white answer here, but in my opinion, it can go either way. Sometimes you've got a street or a property in an area where there's a lot of heritage overlay, there's a lot of heritage properties. That's actually adding value to the area, because those properties are not being knocked down and turned into townhouses. They're preserving that beautiful character and heritage of that street, and that can be a really good thing. But then there are certain suburbs for example, in the outer eastern suburbs of Melbourne, where heritage can be a detractor because the demographics of that area, especially if it's an old rundown property, they want to knock it over. And in which case, they're not going to buy those properties. So it can depend on the area and the street and the demographics.
It seems a bit tricky and a bit annoying to have extra rules added to whatever you're doing, but I can understand why we have them.
Yeah, exactly.
Right. Amy, we have covered a lot in today's episode, from townhouses and whether they're a good investment to pre-sale renovation companies, landscaping and heritage overlays. So I think there is plenty for people to go on here. I'll add links to anything you've mentioned today into the show notes. And of course, we've got our free property course. If people want to get in touch with you, where should they head to?
They can head to amylunardi.com.au, or if you're a first home buyer in Victoria, I've got my podcast and my online course, thefirsthomeguidebook.com.au. And please, please, please keep sending questions in, because sometimes I forget what people don't know, and I forget like things that are important to people. And I really like to see like all of these questions come through. We keep a spreadsheet, and if you've submitted something you haven't heard it on the podcast yet, just be aware we're keeping track of everything. And be sure to listen for it in a future episode as well.
Wonderful. Well, Amy, thank you so much for joining me on the Australian Property Podcast today.
See you next time, Kate.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.